Today's pullback comes after a standout week for the bulls, of course, which saw the S&P jump more than 5%. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors Head of Research and Fundstrat Capital CIO. Happy Monday, Tom. Good to see you in.
Yeah, happy Monday.
You really haven't been unnerved by anything since Friday night, have you?
No. I don't know if there's much signal in the downgrade Friday, because I think the first AAA downgrade was signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
That said, you're not discounting the notion that the vigilantes have been reawakened a bit?
I think everyone should be aware the U.S. has an unsustainable path for debt, but I think the real signal will be when an auction fails. That happened a few years ago, and then we realized that was the time to really pay attention to the fact that we have debt sustainability issues. But I think a downgrade itself, I don't think it makes this much signal.
So we reclaim the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah, in fact, I think today will be an interesting test. I'm assuming today's pullback's going to be really shallow, might even close positive, because most investors rage sold at the bottom in April, and then they doubted.
I hadn't heard that.
Yeah,
that's a good one. Is that your own, or have you heard that other places?
I've heard that. Yeah,
rage sold.
Yeah.
Sorry, go ahead.
And so as the markets climbed, a lot of people sort of doubted, thought it was a rally that would fail, and so I think there's $7 trillion cash on the sidelines, enormous skepticism from our institutional clients, and a lot of folks sort of bet outside the U.S. So I think there's going to be a lot of chasing into year-end.
Although, a lot of shorts have been covered already, though. A lot of the hedge fund guys who actually got it wrong and rage sold, to your point, are in a very different position right now in terms of positioning.
Yes. No, and there's a difference between being short and versus having positive beta to risk assets. So I think most people might be flat on their books. But if the market is above its 200-day, showing this sort of impulsive buying, and you're flat, that means you're underinvested.
How are you evaluating potential changes in tax policy? Obviously, the market has been very reactive to any headlines on tariffs. What about this one?
In fact, I think as we start to think about 2026, and it makes sense because we're in the mid-year, there is not only tax policy that can be a tailwind. It looks like it's going to be, but it's deregulation.
Sure.
I mean, several published pieces show that regulatory cost for U.S. companies is over $2 trillion, maybe as much as $3 trillion. It's a bigger deal than the tax cuts itself.
Yeah, obviously we've been waiting for some time about the regulation. So in this environment, the ever bullish Tom Lee, what are you looking at when it comes specifically to the Magnificent Seven? We watch those so carefully, but the NASDAQ, of course, under pressure here today.
We think the Mag 7 is going to lead into year end because it's a group that fell first. It was widely owned, but it really got washed out. I think Tesla was a really good sort of case study. So I think the Mag 7 is going to reclaim its old highs. That's, of course, why the S&P should regain its old highs and of course, actually move above that before year end.
And what about financials? That's obviously an area that so many people were looking to early on. Is that still on your radar?
Yeah, financials are important. You need the banks to rally. They have been. If I was going to make a case for multiples expanding, financials is one place because not only did they prove themselves actually pretty resilient during Fed hikes and during this turmoil, but they're kind of more tech-intensive companies with better credit profiles. So I think multiples should go up.
If we do revisit the highs, what needs to happen to push past that? I mean, how firm of resistance will it be?
Well, I think investors have to look past tariffs because if we're only trading tariff headlines, the markets are going to be range-bound. But again, as I look at 2026, I'm looking at companies that are battle-tested. They survive the tariff headlines. There might be freer trade. That's an upside to earnings.
Freer trade than we thought.
Yes, than we thought, yes.
But earnings estimates have come down, have they not?
Yeah, but they're going to flex in both directions, meaning I think if we have deregulation, possible improved ability to export, tax cuts, that actually all supports higher earnings. But I also think the multiple for the S&P should be going up because, again, we've taken away a black swan event. I mean, we did, the February to April period was a black swan for stocks.
Do you think the downgrade hurts the push for tax cuts?
I think it's going to have almost no effect.
No effect?
Yeah, because at the end of the day, the bond market prices what they think the rating should be.
I don't mean from the market standpoint. I mean from the political optics standpoint.
Yeah, it might, but at the end of the day, the U.S. really wasn't AAA anymore because it was only 1 out of 3, so it's like not even a split rating AAA.
So, Tom, is there anything out there? I mean, and to be fair, you've been bullish throughout. You were right during this period when a lot of others sort of, whether they rage sold or just got upset in general. But what, if anything, is top of mind for you in terms of concern?
Well, I think the most important is the consumer has to stay healthy because right now we're seeing this huge divergence, right? Like the UMich surveys show banana-level inflation expectations, but the realized is low. If the consumer gets super cautious and retraces, then we have a recession. So I think it does come into consumers have to stay confident and keep their jobs.
And so you're a believer in the data versus the sentiment?
Yeah, at the moment, this divergence between inflation and realized is actually the largest, I think, ever recorded for UMich. And so I would say as long as inflation doesn't explode, then the consumer has marginally a chance to become even more positive.
Wow.
Yeah, a lot of your former colleagues at JPM think that the hard data will catch up to the survey work.
Yes. And I'm paying attention because, of course, JP Morgan, they do a lot of homework and they've got credit card data, so we do have to watch it.
Sure.
So we just have to hope for the best.
Tom, always. Good to see you. Thanks.
He's
Tom,
always
thank
glass
you.
half full, right?
Don't